How's it going, everyone? Today we're going to be looking at a company called SoFi Technologies. The stock is up 101% over the past year, and it's up 30% over the past month. We're going to take a look at what this company does, as well as how their most recent earnings report looked, which was very, very good. So first things first, SoFi Technologies is a different kind of finance company whose goal is to help people get their money right. Our products are built around our members so that they have tools that they need to take control of their financial futures. And you can see here, they offer all these products within one easy-to-use app, which is meant to be an easy-to-use interface, especially aimed towards the younger generations. They offer a series of products to include personal loans, banking, credit score and insights, mortgage loans, student loan refinancing, investments, private student loans, credit cards, insurance, as well as travel savings. And we're going to take a look at their Q1 numbers for this year of 2025. They had a adjusted net revenue of $771 million, which is 33% year-over-year growth. They had record adjusted earnings per share of 6 cents per share, which is the sixth straight quarter this company has been profitable. A fee-based revenue of $315 million, which represents 67% year-over-year growth and 41% of their overall adjusted net revenue. Financial services and tech platform revenue contribute to $407 million of adjusted net revenue, which is 66% year-over-year growth. So another glimpse of what this company offers, it's this app with all these products offered within it, making it very easy to consolidate all of your finances on one easy-to-use location. And we're going to take a look at their membership growth, which has grown significantly. They've had 34% year-over-year growth in membership and a compound annual growth rate of 52%. They've also increased their amount of products offered, and they have 35% year-over-year growth for products offered. Adjusted net revenue, their guidance is pretty good. You're looking at, on the low end, $3.2 billion in adjusted net revenue compared to 2024, which was $2.6 billion. Very strong growth there. You're looking at a 33% year-over-year growth in adjusted net revenue. As well as adjusted EBITDA, you're looking at a 2025 guidance on the low end of $875 million. Compared to 2024, which was $666 million in adjusted EBITDA. And big one is this adjusted net income. You're looking at, on the low end, 2025 guidance of $320 million compared to 2024, which was $227 million. You can also see here that this company was very unprofitable in 2021 and 2022, started to break even in 2023, and now we're having significant growth in their overall adjusted net income. So this company's growth is very strong. Their net revenue is very strong. Their fee-based revenue has grown significantly as well. In terms of earnings per share, they're looking at a low end for 2025 guidance of 27 cents earnings per share compared to 2024, which was 15 cents earnings per share. This is very strong growth in terms of earnings per share. This company is doing very, very well. Net revenue has increased significantly. Their net revenue in terms of overall net revenue was $303 million in Q1 of 2025 compared to 2024 Q4, the previous quarter, which was $257 million. Let's see here. Next thing we'll look at is their student loans as well as their home loans as part of that revenue. These are real big ones that have grown significantly. You can see here that student loans were $1.1 billion in originations, first quarter originations for Q1 2025. Compared to 2024, which was $752 million. Very strong growth in student loans. And I wonder if the Trump administration and their new policy in terms of student loan forgiveness or lack thereof compared to the Biden administration is now leading to that student loan origination growth, as well as home loans have improved. They had $518 million in home loans in Q1 of 2025 in terms of originations compared to 2024, which was $236 million. So maybe as the housing market improves and if we get rate cuts later in this year, could you see more home loan growth for SoFi? That seems to be a very strong growth part of their overall revenue. And one of the last things to look at before we start finishing this up and we take a look at valuation real quick, guidance for 2025, they've updated this. I'll leave this paused here. I'm not going to narrate all of these, but their net revenue, adjusted EBITDA, net income, and earnings per share have all been upgraded for guidance. And this was a really big cause of this stock shooting up on this earnings report, this was a very, very great earnings report for this company. So you can pause the video here if you want to take a closer look at this. Otherwise, I'm going to keep moving on. So the last thing I wanted to look at real quick was 90-plus day delinquencies. The overall percentage from Q1 of 2025 compared to Q1 of 2024 decreased pretty well. In Q1 2024, you were looking at 0.72% delinquency on personal loans, and that's now down to 0.46% delinquencies here in Q1 of 2025. As well as for student loans, Q1 24, you're looking at 0.13% 90-plus day delinquency. Compared to Q1 of 2025, that number has remained flat. We're still at 0.13% delinquency. So that's one of the things I want to be very careful of. Is this company increasing the revenue by maybe lowering their underwriting guidelines and standards in terms of who they're giving these loans to? But it doesn't seem to be the case for SoFi. It seems like they're doing a good job of that. The last thing we'll take a look at is the overall valuation. You're looking at a PE right now of 31 according to Seeking Alpha. That is not a bad valuation for a company growing at the rate this one is, as well as a forward PE of 47. I doubt if that's actually accurate, especially with the new updated guidance. But this company is not terribly valued. They're getting a D flat overall from Seeking Alpha. And for market cap as well, I wanted to highlight this company is worth $14 billion right now. So this company has a lot more room to grow. It's not a highly priced company yet. And in terms of Seeking Alpha growth rating, you're getting an A, solid, nice A, and then profitability, you're getting a D minus. I don't think that's the case, especially once you start factoring in those updated guidance for the rest of this year, and then that increased earnings per share. This company has a very strong growth story ahead of it. It's got a lot of things going well for it. Let me know in the comments if you think this company is worth purchasing, or if you think that this company is horrible. If you like this video, consider subscribing. If you didn't like this video, then please do not subscribe. Thank you all for watching, and y'all have an excellent rest of your day.